they started talking about how more men named David receive funding for their businesses than all women combined.
How do we help you be part of changing that stat?
What are the red flags and green flags when you pitch?
Absolute horror story. I was at Web Summit in the Investor Lounge and I had a glass of wine and it had been a really long day. And my glass of wine was full. And this is important because you will then realize why it is such a big deal that I ended up doing what I ended up doing at the end of the conversation.
Thank you for being with us here. Today we're joined by the amazing Hattie Willis, founder of GuessWorks and If We Raise. Hattie, can you please start by introducing yourself?
Yeah, sure. Thanks for having me, first of all. And wherever you're listening, if you're on a dog walk, if you're doing chores around the house, I would personally have to listen while I'm doing things like hanging up my washing.
Yeah.
Hopefully today is going to be really practical and useful. So I love hats, as my name suggests, and I wear two, as you mentioned. So GuessWorks is an entrepreneurship education company. We go into schools, universities, accelerator programs, corporates, and starting to do a little bit with charities too, around the practical skills of leading in uncertainty and making something, an idea, into reality. So we teach everything from generating new startup ideas, fundraising, internationalizing ideas, but also in a corporate setting, we teach how do you train initiative in early careers? How do you help managers set KPIs about turning new ideas into actually trackable revenue generation or cost savings? And then I have a second company, If We Raise. So If We Raise works directly with founders, particularly underrepresented founders, which is actually the majority of the population in the UK. Not the majority of the population that gets funded, but it covers female founders, founders of colour, LGBTQ plus founders, founders from lower socioeconomic backgrounds, disabled founders. So it really is most people. And we try and help them work out the right funding fit for them. So one of the things that we're really excited by is something called seed strapping. Seed strapping is when you have an idea, you get an initial chunk of funding to get to profitability, but you don't need to be what we call venture backed. So go to venture capital firms, raise millions of pounds with the idea that you're going to grow to be a company that's worth $1 billion. We think that doesn't fit for most companies and there needs to be another path. So we're trying to help founders carve their own path.
That's incredible. And as a founder myself, I'm so excited to chat to you today. But I think that some of our audience might not be as versed in the entrepreneurship world. So I want to do a quick fire jargon glossary moment.
I love.
Before we start throwing all these random terms around, I think that will be useful just so we include everyone in the conversation and we make it as accessible as possible. So first of all, you did a really interesting post on what you think a founder is.
Okay.
So
yes.
Let's start with, what is a founder? I mean, we're both technically founders, but what does that actually mean?
Yeah, I mean, it's a super loaded term. So for me, it's someone who's building a business that is targeting profit and a meaningful growth for that individual. So the thing I guess I'm always trying to define it against is you don't define whether you're a founder by whether you've fundraised. You don't define whether you're a founder by how big your team is. It's none of those things. For me, it's about someone who started a company with a goal of profit because they really want to build a business that works for them. For some people, that will mean like growing at a huge scale and a huge pace. But for others, it might mean a lovely lifestyle business that supports them, gives them freedom, flexibility to live the life they want and earn what they need.
Awesome. And so that's one lifestyle founder type. And if you are looking for investment, again, the world of investment and fundraising, there's so much jargon as well.
It's all jargon.
And so I think, again, before we chat about that and the different types and whether you should actually consider going down that path and which path specifically to take, let's talk about the different types. So first of all, what is the difference between an angel investor and a VC?
Okay, so angel investors are individuals investing their own money. So they will typically be someone who has a way to make enough money that they can invest at least £20,000, rule of thumb in the UK. I can explain more on why. But so they either need to be in a really well-paid job. So we're seeing more individuals who are in well-paid jobs starting to angel invest on the side, which is really great to see. They still have really valuable networks. They can learn founders. They have deep understanding of an industry that the founder might be operating in. So they can be incredibly useful. Often angel investors will also have had their own business and sold it and therefore have some money from that sale that they want to reinvest in founders, or they've been part of a startup that's grown and they were early enough stage, they got equity. And then on the sale, they made some money. So again, they're investing it. So the key with angels is they're individuals. And that means they are incredibly individually motivated. There are common trends. So angels need to believe that they could make a return on the investment. And that needs to be a return that is competitive with what they could do with their money in safer routes. So if I just put it in a savings account, particularly in a nice high interest environment as we're in now, then what would that money make me over the same period that a founder is going to need my money to be building the business? So 5 to 10 years. They will also need to be excited about the journey, typically. Again, you do get what we call dumb money. Doesn't mean they're stupid, just means they're silent, dumb and silent. So they'll just pay the check and then they don't get involved in the day-to-day. But the majority of angel investors want to be a bit more involved. So they want to be playing that advisory role, helping move the startup forward. We call that smart money. So they're bringing more than just the money, they're bringing expertise, network. And so they need to, for those angels, be able to get really excited about, I want to come on this journey with you. I think this is going to be teaching me something fun to build. And for some angels, not all, some, they also really care about the impact you're creating. So particularly if you're founding a company that's going to right a social injustice or give access to a group that hasn't had it before, or try and fix something that's really dangerous when it's broken in medical world and climate, etc., they might get really excited by that mission and wanting to be part of the change that you're making. So angels, individuals investing their own money, very individual motivations. They do sometimes hang out in groups. We call these angel syndicates. So they're groups of angels who come together. Angel syndicates have different rules depending on the syndicate. So sometimes they will invest as a group and only if everyone or a big enough proportion agrees. Sometimes you'll still get individuals investing within that group. So angels. And then on the other side, venture capital. So venture capital is essentially where one person and a few people have gone and raised what we call a fund. So they've actually gone and fundraised from investors. These investors we call limited partners or LPs. And these are often big institutional finances, like they might be pension funds, for instance, or they're ultra high net worths, or what we call family offices. So family offices where a very high net worth family have brought in someone to manage their funding of startups, and they've created almost their own fund around it, but it's just from that family. So venture capitalists go and raise from all of these different kinds of investor, and they do that against a thesis. So they basically are going and pitching to these investors, here's what we think is the next generation of founders that are going to be successful. Here's why we are going to deliver you amazing returns for your money. Again, outperforming if you invested in stocks and shares, for instance, the S&P 500. So that money, again, has to be able to be delivering this big return. And for VCs, they tend to have to deliver a much bigger return to their investors than angels, because angels are investing their own money. They haven't made quite the same promises. So venture capitalists raise a fund, and they raise it for a period of time as well. So tell investors, their investors, we're going to raise a fund and we're going to deploy it over the next few years, and then we're going to try and return your money in 10 years. So that is venture capitalists. So they are essentially bringing together other investment, and then you will have general partners who manage the fund, and then you'll also have other people underneath them who come and work within the venture capital fund. So it almost becomes more of a company. You'll have analysts, you'll have partners at the fund as well.
That's so interesting. Thank you for sharing. And when we started, you said that route is not something that every business needs or necessarily wants. And so what about the people who are starting businesses because they want to create their dream life and they want to have autonomy on their time freedom and their financial freedom, and they are passionate about a cause, but they don't necessarily want to be a $1 billion company? What is bootstrapping?
So bootstrapping is where you're not taking what we call dilutive finance. So dilutive finance or equity-based funding is where you're selling shares in your company, so a percentage of your company ownership, you're selling that in return for money. And so when you go and raise investment from angels or from VCs, they'll often say, okay, we're going to raise £250,000 and we're giving away 10% of the company in return for that money. So bootstrapping, you're not taking any dilutive funding. You're just funding it from either your own money. You might be working a job and still have a salary, or you might have quit your job but you've built up enough savings before, or you might be in a position where you can actually like freelance alongside what you're doing. So maybe it's not a full-time job, it's not a salaried position, but you can make some extra money around the business. Even better, maybe you can get to early revenue. So the company is actually paying you from day one what you need, so that or building to what you need, but you're making money in the business early. There are also non-dilutive kinds of funding that you can have. So loans, so going and getting a bank loan or getting a startup loan from someone like Virgin Startups. Got to be quite careful with those because normally in the really early stages, a loan will be secured against you as an individual. So even if the business idea fails, you still have to repay the money. Unlike equity funding, where if the business fails, your investors just don't have anything. They have a share of something that's worth nothing. So debt or loans you still have to repay. And then there's also grants. So grants are where you can kind of essentially bid for, I want to do this with the money. There'll be a grant funder who will agree to do it. And you can then get that money. You've got to be a bit careful with grants because a lot of the grant funders, annoyingly, will essentially give you the grant. They'll say, you've won the grant, you've won £500,000 to go and do this. We'll pay you once you've done this. So you've got to be a bit careful with grants because they don't always pay up front. And so if you don't have any money to actually do the work for them to then repay you, you've got a bit of what we call cash flow issue.
Wow. Okay. And so if someone's listening and they're getting really excited by this, then they're thinking of starting their business or they've already started their business and they need some money to scale it and to grow it and to get more clients or to get their product off the ground. How can they figure out what type of investment is best suited to them?
So in the UK, often founders will go to angels first to get more proof points and then to venture capital. So what's happened over the last few years is that investors of all kinds have essentially started looking for more proof points earlier. So they want to see a higher number of users, a higher number of paying customers, ideally, earlier than they used to before. So as a general rule of thumb, it's often a good idea to look at angel investors first, and then that builds to proving to VCs it's exciting. Sometimes there are what we call pre-seed funds, so they're early stage funds that you can look at as well from venture capital. But the questions I would be asking around what does success look like to you in this business and on what time frame? So if you're looking at going, I want to be able to pay myself £100,000 a year, and I want to be able to do that increasingly where I'm not having to work in the business. I just want this to keep making me money. Then equity investment might not be the best route for you because that's a really nice lifestyle business, but there's not a big payout for an investor. If you're thinking, actually, I want to build a £25 million company in the next 5 to 10 years, angel investment might be a really good route because that could still be a really exciting return for angels who put in an initial chunk of money and then get, a few million back. But that's not going to excite VCs. VCs, remember, have promised a lot more to their own investors. They've raised a lot more money and so they have to deliver a lot more back. And because of something called the power law of investing, which basically means that because 9 out of 10 companies will fail, the 1 in 10, it has to pay back for everything. So you have to understand that as almost like a pass line, venture capitalists are trying to understand, do you have the potential to grow to be that $1 billion opportunity? And so you need to check for that. Does this business model, does this opportunity look like $1 billion opportunity? Could it grow that huge? And be careful you don't limit yourself there because sometimes founders kind of limit their own beliefs and get some help with that if you're not sure. But also, do you want to build $1 billion company? Because it's okay if you don't. And I don't think that's... I have no intention of building $1 billion company. Sorry, Tim, my co-founder, if, he does not think differently because we've talked about it a lot. But I really think you might think actually that growth trajectory that you're going to have to hit. So as a rule of thumb, in order to get there, you're going to have to triple, double your revenue every year. So for the first few years, you're tripling your revenue every year and then doubling it. That's huge, insane growth. For some people, that is so exciting. It's like a roller coaster they're desperate to go on. Amazing. Great. For other people, it's not a roller coaster they're interested in. Also great. And I just want us to be able to have the conversation that you can explore on 2 fronts. One, what's a good fit for me, the founder, based on what I'm trying to build and the lifestyle and the sacrifice I'm willing to make for how long in that journey. And then on the other side, what is the business needing and what's the business able to absorb? Because there are business models that are not venture backable as well. They're not ever going to grow to that scale. They're not what we call VC backable. And so we do need to look at both halves, the business half and the founder half.
I think that's so awesome. And I definitely agree with you, because I don't want a $1 billion company as well. And I feel like thank you for giving us permission to say that, because I think that if you say that out loud, sometimes it feels like you're setting yourself up for failure, you're not being ambitious enough, or like, why are you bothering to start something if you're not aiming for like the top? But I want to talk a little bit about founder goal setting and how you can set different goals with different metrics based on the person you are and the team that you want to lead and the company and the culture that you want to have. So can you tell us a little bit about your personal founder goal setting journey and any advice you have around not just how to raise, but if we raise, why?
And I think one important thing to add in that I probably wasn't asking when I was your age, as well as about life stage, because my goals have changed so much. I'm now 32 and my goals have changed a lot over the last few years because I'm suddenly at a different life stage. So I think when I founded my company GuessWorks, I was 28-ish. Yeah, there or thereabouts. And for me at the time, the things that really mattered to me were working on something that I felt like I was really proud of the impact that we were delivering. That I wanted to work on something that I had autonomy over, and I kind of wanted to pay myself enough, but just enough. And candidly, when I started GuessWorks, it was just like, I built the brand just to host my workshop slides. I was like, I'm going to freelance for a while. I'm going to go and run workshops, and then I'm going to build another business. And in that period, I met my co-founder for If We Raise and started building that. And we started working out what are our goals for If We Raise. And it's a very mission-focused business. So for us, it's about how we getting access to people who don't have access, how we helping people who are going to be really running up against challenge after challenge and bias after bias and against the system, not waste their time and energy on running down the wrong path that isn't actually what they want anyway. And so for that, we increasingly realized, again, it was such a mission-oriented business. And through the journey of kind of doing both, I increasingly changed my mind about what I wanted from GuessWorks. I was realizing how much I love training, which I had known for a long time, but I'd probably forgotten a bit while I was being a venture builder. And I was realizing what I really want, and it's really crystallized in probably the last couple of years, is I want to build a business where I have optionality to do the things that I love doing at the level that suits my needs at that time and based on what else is happening in my life. So what I'm trying to build now with GuessWorks is a business where it can grow when I'm not there, so that I could step out and we are continuing to grow as a company and I'm continuing to be proud of the impact we're delivering, but I don't have to be the one delivering, selling, doing all of that. That's a long-term goal. That's not going to happen immediately. I've spent the last kind of 2 years kind of trying to build it and grow it, but that's probably another 2 years off to the point where I can kind of step out and it can keep running and keep growing, and that's my timeline I'm working on it for. So I think what's changed in my goal setting is I now have much more concrete timelines. So I now know I want to be in that position in 2 years' time, so that I have full optionality over whatever I want to be doing in my life. For me, that probably is going and hopefully having kids in a couple of years' time and being able to support my lifestyle, take whatever maternity leave I want. And actually, I think I've been saying that to myself in my own head for so long that it started, not for so long, but intensely for a year or so, that it started to feel almost like a small dream. And actually, I've been stepping back recently and realizing like that would be amazing. Like I would be so proud and so grateful if I can get it to that space. So I think it's goal setting needs to take into account what motivates you and drives you. An exercise I often do with founders is what energizes and what drains you. and what do you have a hypothesis might energize you that you haven't had a chance to try. And so for me, the dream is keep doing what we're doing with the kind of insane talent that comes and delivers workshops for us. Like, genuinely makes me want to pinch myself every time. And the founders we get to work with, insane. And so I want us to keep doing that work. I would love us to keep growing into the corporate space, because I feel like there's so much more we can do there to support early careers, talent management and senior leadership, to have these skills that I think are just going to be so fundamental to the next wave of work. But I would love to have the insane privilege of being able to pick and choose when I come in and out of the business based on, I miss a workshop, I want to do that workshop, that one was fun, I'm going to do that one, and then also be able to step away and do life. And that's something I value at an insane level, because I've had to step out of the business to deal with some stuff at various points, and being able to step back and it doesn't all break is an insane privilege.
Yeah, for sure. What do you think about the whole work-life balance idea? Do you think it's a myth? Do you think that you, like, because you run two businesses, and like you said, there's been times where you need to step out, and also you shared that you have ADHD. I also have ADHD. And I found that work-life balance is not do 8 hours of this, 8 hours of that, 8 hours of that. Yeah. For me, it's seasons. So I'll have a particularly intense season of work, or right now, for personal reasons, I'm having a much slower season. I have to slow down. I have to take care of someone in my family. But I find that that's how I achieve my balance, rather than trying to get everything in one specific moment. Overall, just having a balance in the bigger picture of my life.
Yes. And I want to be clear that I don't think I've nailed this, because I think often I post like a weekly wrap, and sometimes I talk about, I went and got a working pedicure, which is like lap to lap, feet being done. Is a really good life hack. And this week, for instance, I didn't work on Monday because I was in Prague with my godson and my best friend, or one of my best friends. Get in trouble for that. So I had that flexibility, and that's gorgeous. And my brother's coming to visit from Bermuda in a couple of weeks, and I will just not work, and I don't have to track any of that, and I can make those choices. The truth of founder life, though, is that the work just gets pushed into the other days, and so it does become a higher intensity, and therefore I expect a higher output. That kind of works a bit for my ADHD, because urgency is a really good motivator, so it kind of is okay. But I think, I'm going through some group coaching at the moment, and it's been really helpful. And one of the things, so being really candid, I was on a call 3 weeks ago, ended up sobbing on the call, not sobbing, but quite dramatically crying. And I was just feeling really overwhelmed. We're in a really busy period for delivery, but equally, there's so much strategy I want to be starting on. And I feel like my focus is too much on delivery, and I want to get more into I want to get out of that cycle. And so I was feeling all this pressure to be doing this strategy, and also I'm really excited about it. So it feels really hard. And I was struggling to get that balance right. And I had a load of work time off to do lots of amazingly fun stuff. One of my best friends got married, got to be really present for that. I took a day off for my birthday, like all lovely things. But again, the work was all getting really pushed. And so I was feeling this real strain, and had this really easy thing to hit myself with, which was like, well, you're also not doing the strategy, and you're also, you were under strain last summer at the same time. Why are you still in the same strain? So got emotional on this call, because I was just feeling like I was feeling really hard on myself. And actually what we talked about on the call is chapters. So this idea that actually this chapter that I'm in, we discussed, and it was really helpful to be kind of coached through, well, like, how finite a period is it? And actually for us, it finishes on the 12th of August. So it's soon, it's 6 weeks. We're now looking at 6 weeks. And I do know it finishes then. We run lots of summer schools, like they are just really intense. They're done then. So for me, it was a question of, okay, maybe I just give it 6 weeks and then I start on the strategy. But then we looked at, actually, at the end of those 6 weeks, am I going to be in a place where I can do strategy? I'm knackered now. End of those 6 weeks, I'm going to be limping to the finish line, loving it, but limping. And actually what I've decided quite radically, for me at least, is that I'm going to pretty much take August off. So the first week of August, I'm going to do 3 1-hour workshops, 2 1-hour coaching calls, and that is it. And then, which maybe still sounds like quite a lot, but actually it's all practice, super easy. And then week 2, I'm just going to do 2 full days of work, and then I'm done. And then I'm taking the rest of August off. So from the 13th onwards, no work. She says, committing. I keep caveating it when I say to friends, I'm like, and I'm planning to take August off. And they're like, no, you are taking August off. And so for me, I think the idea of balance, to your point, I don't think it can be judged on a day-to-day basis. But I think it is about, what I'm learning for me is that it's about reframing our expectations of ourselves on both counts as well, because I am, I'll have a busy work period and then I'll feel like I've let a load of friends down. So then I'll feel the need to compensate there. And actually I'm burning the candle at every end. And sometimes what I need is some rest and some recoup, and to not be doing every weekend and every evening. And so, yeah, I'm working on it. I don't think I've nailed it. I think I've nailed elements that I love and I'm really proud of. The ability to take and be present for those days off. Like, that's come a long way in the last few years. I really struggled with that before. Now it's the move of, how do I more sustainably look after myself so that I'm not just like shrinking my work into these really small, really hard to deliver periods so regularly.
Thank you for sharing that. That really, really resonates, because I feel like we're similar in certain ways, of the way that I feel like my life feels like a high intensity interval training workout, where it's like you have these really intense bursts of like unrealistic output, and then like almost the freeze state of like, I can't work anymore when you rest. And I really like that you said that you've become better at being able to intentionally enjoy the time that you're off. How do you deal with the guilt? Because I think that's something that a lot of founders struggle with, that they feel that when they're taking time off, they can't focus on their work, and they feel guilty that they're not giving to their baby. And then when they're on their work, they feel guilty that they're not giving to their friends and their family. And you could always be doing more in one area of your life. And I think that's universal, regardless of whether you're a founder or not.
No, I think that's true. I think, and also I think like I'm not a parent, but I look at my friends doing it and I'm like, add actual baby guilt. Like you can't, like, insanely brutal. Again, I think, weirdly, I don't feel guilt at the time. So when I'm taking the time off, I'm just loving it. And that this is exactly what I should be doing. The guilt probably comes in between, when I'm either putting myself under real pressure, or when I'm then not able to do the work I want to do in that time. So I definitely feel it. I think the thing I'm working really hard to reset is my own expectations of myself. And I think what's really hard is we don't really understand the pace other people are working at. And so all you have to compare yourself to is your own level of productivity. And therefore it's really easy to beat yourself on the head if you're trying to slow it down. And I think what I'm trying to remember, years and years ago, maybe 10 years ago, I decided to go 4 days a week. And I did it at the time because I wanted to work with impact startups a day a week, which I loved. But that was much gentler, that 1 day a week. And I didn't do it every week. And what I learned in that process was I was so much better on the 4 days I was working, because I was recharged. And then somewhere along the line, I completely forgot that lesson that I believed so strongly, that I was advocating for everyone to do 4-day work weeks. And now I definitely don't work a 4-day work week, unless I'm doing something really intensive on the other day that means I'm kind of, normally coming off a 30th weekend or a wedding or a christening, or, those have been the last few weekends. So I think, it's accepting that the guilt, it's not that it's normal. I don't want us to normalize it. I do want us to keep challenging it, but having the guilt doesn't mean it's right. Just because you feel the guilt doesn't mean it's true that you should feel the guilt. And I think the best, most powerful thing for me has been building in this group coaching weekly, and I can turn up to the call and be challenged and actually have that narrative interrupted. And I thought, because we've been talking so much in that group about how I did need to take these big strategic moves, and I was getting so much clearer on them, and I really thought I was almost going to have my feet held to the fire by the group on accountability, that I wasn't doing it. And actually the group was so compassionate and forced me to be more compassionate to myself. So I think if you're struggling with it, also don't have the expectation that from that state you can fix it for yourself. You might need some other people to help you interrupt those narratives.
Yeah, for sure. And I think that people always say entrepreneurship is lonely, and so having community, having coaching is so valuable. And it's so interesting to me that as a coach and like facilitator yourself, that you still seek out coaching and support. So what support and coaching do you think is really valuable and something that all founders should look into?
Yeah, and just a note, I really under-prioritized it in myself because I almost felt like I should be able to do this for myself, spend my days doing it. Why can't I do it for myself? And there's also I think potentially it's always a really vulnerable thing. But I think as someone who coaches and trains, there is something incredibly vulnerable about going in front of a room of founders and going, I'm struggling with this. I don't know what I'm doing with this. I'm falling into these really common things, and being coached through things that you know you would spot in someone else in a second, and you just can't see in yourself. And so for me, I think it's really helpful to have a range of different people around you. So I think I'm really finding this peer coaching great because it's a big enough group that there's always someone on the weekly calls. It's facilitated by someone. So I feel like there's not a risk that we're going to run each other in the wrong direction. And the things that I find really helpful with it are helping me set bigger, more audacious goals. So again, something I try and help startups with a lot, but struggle with myself. And one of our coaches talks about 10x, not 10% improvements. So I found that really helpful. I also think depending on how well you know a space, it's helpful to have advisors in the space you're working in. But yeah, I think so much of the time when you're a founder, you're either working with people who you're trying to lead, or you're trying to sell to, or you're trying to serve if they're a user but not paying customer. And that just means it's really hard to have the same level of vulnerability you need to get the support. So yeah, massive fan of peer groups. Or, you know, I controversially, I have so many, sounds like such a humble, I have so many friends, I have so many great friends, but I'm really lucky. I have loads of friends, loads of whom are founders because we're all crazy. And so I do have all of these friends I can go to, but actually I think I've been thinking for a long time that was doing the same job as formal coaching. It wasn't, because that support network is great for events, and it's great for it is great for practical kind of intervention, but your friends, and actually a lot of the time what I need and want to be doing with my friends at the end of the day is go for a glass of wine, and I'm not talking about work at all. Right. And so having that space in your work day where you know you're going to get the coaching, yeah, for me it's just been irreplaceable.
That's so valuable. And I'm very lucky that I'm part of an incubator. So I kind of have that support built in, and I see the value. And through If We Raise, you have these growth pods and you provide that kind of community. So can you tell us a little bit more about that and the work that you do there?
Yeah. So growth pods are groups of 10 founders who are at a similar stage. They might have very different business models and be in very different sectors, but similar stage. And the growth pods focus on how we're getting you either to first revenue or to more repeatable revenue. So we look at really coaching around, have you got the customer group nailed down? Do you really understand the value you're offering them? How are we doing pricing? How are we doing our MVP? How are we doing pre-sales? All of these things. But it's not curriculum based. So the way we work is, depending on the group's challenges, each week we'll focus on a different challenge, but there's room for the whole group to be asking questions and getting support. We embed a facilitator so that it's not, I think the danger is always peer-to-peer support. No one's been here before, right? So if you're all at the same level and all have the same level of experience, and I'm often this person because I'm quite a loud personality, it only takes one person being like, it's this way, and then you all run off a cliff. And so we try and have a facilitator embedded. We do have a facilitator embedded in the group who's at least a couple of stages ahead of the founders, so you can really empathize with them. we can pay it forward to founders who are potentially bootstrapping their own businesses, and could do with a bit of a cash injection, but they've got more experience, they've got more exposure, they can really coach around this stuff. And then you get the added benefit of the exponential network. So everyone around you in the growth group, we're trying to help build a network. They're doing that. And then on the flip side, we also have pitch pods for founders who are focused on fundraising to look at their pitches. And then we're building a network of angels to complement both, who are focused on seed strapping. So they believe they want to back founders who aren't just venture backable, but who might need that initial chunk of cash to get them to profitability and exciting growth.
That's so cool. And I want to talk a little bit more about pitching, because I think that's so important, and that's relevant regardless of whether you want to fundraise or not, because you're either going to be pitching to investors, or you're going to be pitching to your team, or you're going to be pitching to your customers or clients. So partners, your family and friends as well, to explain to them what you do. So I think having your pitch and your story nailed down is so valuable. You did a really interesting article on the If We Raise website on like pitching and the pitfalls. I want to talk about pitching red flags and green flags. I know it depends on the founder and the business. And it's a very there's no one size fits all answers, but I'm sure that there's some general rules. So what are the red flags and green flags when you pitch?
So only being able to deliver in a set pre-prepared way is a big red flag. So if you've nailed your pitch deck, delivering it with slides, but if you can't do it without slides, if someone says, yeah, I've seen the slides, can we just talk about this, and you can't adapt and talk to your business fluently and still powerfully in a way that breaks the flow you've pre-designed, that's a red flag. So I want founders who the pitch is there because they've prepared a really slick, fast, exciting way to deliver it, but they can still bring the same energy, clarity, story, even if I ask them to do it with no sides, even if I ask them to play with the order, even whatever it is, that they still fill me with the same confidence, and they still emote the same things from me. They can still get a reaction. Green flag knows what they're trying to create as an emotion and can tell a story that is memorable around that. So I went to Amazon's sustainability demo day yesterday, and I could tell you a load of the stories from the pitches because they're memorable. And I could go and tell friends who might be interested in the idea, whether that's investment or might be customers, because I get it. It was clear, it was concise. I can retell it. And I think founders forget the power of someone being able to retell your story, because what you want to be equipping other people to do is go and be your champions. And you want them, investors talk, they have WhatsApp groups, they tell each other opportunities all the time. I was chatting to one of our angel investors who supports If We Raise, and he was telling me the other day about how frustrated he is because there was an investment opportunity he passed on because he didn't really know the space, but he sent to a load of his friends because he was like, you know this more, and maybe it's interesting. They all invest and it's doing really well. So he was like, damn, why did I pass it up? So make it memorable so someone else can go and tell your story and do a great job. Massive green flag. What else? Oh, doesn't monologue at you when you're like meeting them. Absolute horror story. I was at Web Summit in the Investor Lounge, and I had a glass of wine, and it had been a really long day. And my glass of wine was full. And this is important because you will then realize why it is such a big deal that I ended up doing what I ended up doing at the end of the conversation. So someone comes over to myself and my co-founder, Tim, and starts introducing themselves. And she says, oh, you guys go first because my instructions are really long. Immediately, I'm like, hang on, why do I get less time? Am I less interesting, less important? Like, A, I'm not going to do a long intro because that's dull as anything. But there was already this weird, sorry, what's going on here? And then she proceeded to monologue at us for 5 minutes. I tried really hard to give her a chance to not do that by asking questions. As she went, she could not be interrupted. She was on her spiel. At the end of those 5 minutes, I politely thanked her and left. And my glass of wine was still full. I left my full glass of wine because I was so desperate. That is how bad it was. So never make an investor lose their glass of wine because you're pitching so horrendously at them. It needs to be conversational. And I think founders forget that when they meet someone. What you're trying to do is not to get the output you want immediately. So if I meet you and I want to hire you, I'm not immediately aggressively pitching at you to join my company. If I meet you and I want you to be a partner, I'm not immediately aggressively saying, yeah, we should partner on this, do this. I'm trying to connect with you. I'm trying to get you excited, imagining what that could look like. Get you excited, believing in what we're doing. Get you excited, believing in me. Yeah. And that comes from conversation, not from pitch at.
That's so powerful. And yeah, no, I think what you said about the wine is so important because you said investors talk to each other, right? And so I'm sure not only are you sharing this story here, but that's something that's like a funny anecdote. And that person, like, they probably have a really good idea, but like their delivery or something has shot them in the foot. So how can, on the other side of that, if you have a really good idea, but you don't have revenue or you don't have those like other metrics of traction, how can you use your pitch to tell a story in a way that's really compelling?
So number one, I would always challenge people, can you get those things? So I think founders are often a little bit defeatist about whether they can get to revenue, and they almost want to wait for this big launch. And getting people to commit to pre-sales, it can be really powerful. Getting people to sign up to a wait list, getting people to refer other people to a wait list, all of those things that would be really seriously challenging. Any founder can you get. If you're in deep tech, health tech, if you're in fintech, like it's a regulated industry, you're not going to be able to get that in the same way. But you might be able to get some signals with a wait list, for instance, but you're not going to be able to get revenue. So number one, can you get it? Because investors are looking for it more. Yeah. With your pitch, though, if you don't have those, what else is going to help me believe in your credibility? So the people who are often successful raising, when they don't have those things, they have some other litmus test to say, I trust you with my money in this space. So it might be that they have built a successful startup before. Okay, you haven't yet done it this time, but you've got a track record. It might be that they really know this space inside and out, and they can demonstrate they've got this incredible network in it, that they can demonstrate maybe they've got partnerships that are going to accelerate their go-to-market, and that those partnerships demonstrate a trust that they found a real pain. Maybe it's about who they've been able to attract onto the team. Again, if the team is exceptionally talented, if you've got the leading PhD in new research or postdoc researcher in a new field, amazing, for instance. So I would be looking at what else are you doing that proves the demand, but also your ability to execute. And I think founders over believe that they can just give all of the solution specs that they're really excited about. It's not enough.
Yeah, for sure. And before we wrap up, I think it's important to discuss, I mean, you said it was a big part of If We Raise, the conversation around the funding gap and underrepresented founders. Mm-hmm. It's one of my main motivations for creating this platform and championing female founders specifically, but also the intersections of that. Yeah. And seeing that, I remember the day, so I went to a VC Femtech conference. I was 18. I had no idea what VC Femtech even was, but I had a mentor and she took me. And they started talking about how more men named David receive funding for their businesses than all women combined. Yeah. And 2% of women receive funding for their businesses through VC. And that was in 2021. I was sitting there and I was like, is that for real? Like, I know that we still live in an era where there is inequality in the workplace and in society, but 2% is crazy. And that was something that really like showed me the light to where I want to put my efforts and energy in terms of the work that I do. And I see that in what you do with If We Raise. So can you tell us a little bit about your experiences with working with underrepresented founders and what they can do to help mitigate the bias that's already put against them?
Yeah. So I think the first thing to say is I've shared a load of these stats. I've done talks at Web Summit where I've shared a load of these stats. I'm increasingly getting nervous that we are scaring women off with the stats. And I think we need to be honest about the stats enough that people going through the bias don't start to internalize it as their fault. I think there does need to be a world where if you're statistically far less likely to do something and you're running up against the glass ceiling or whatever it is, that we have some sort of protection in place that allows founders to understand that and understand how it's impacting them. That said, those numbers don't change unless people change them. And what I'm hearing from a lot of female founders in the last year particularly is how demoralizing they're finding the numbers and how much it almost puts them off track. And that is not the message I want female founders, founders of colour, black founders, intersections, black female founders who get 0.2% of the funding. What I don't want them to be doing is going, well, this isn't for me. What I want them to be checking is this for me? And checking that from a personal perspective first, not is this for me because the bias is against me in the system, but is this for me, like, do I actually want this thing that I'm going to have to run really hard to get? And then how can we help you? Like, if it's right for you, how do we help you break it down? But I also want to be honest, I don't think that job is all on the found. It has to come from the investors. And so the big things I think need to happen, we need more diversity in investment. About 14% of UK angels are women, super low. And we know that affinity bias, investing in people that remind us of ourselves, is such an important reason why, because of who the investors are, who gets funded looks the way it does. So I would like to see many more angels who are coming from different backgrounds. And that's harder because you get all of these, when you start to go into it, there are lots of reasons why these groups aren't investing. So it might be more caring responsibilities. They actually might have more financial outgoings. If you're from particular cultures, to care for relatives. If you're a woman, the caring burden still falls a lot on you. So there's lots of reasons why. But I would love to see more people being encouraged to believe that they can be valuable in this space and that it can be an opportunity for them as well. And there was a really interesting study done that looked at financial literacy, and they did a quiz, and it had kind of, I think it was multiple choice, and it had the answers, and then it had don't know as an option. And they found when they compared, men were scoring much more highly on this quiz than women. And they made one change to the questionnaire, which was they removed the I don't know. Suddenly women were scoring the same, if not better than men. Because it wasn't actually that they didn't know, it was a confidence issue. And so what I want us to start to be really careful with in the conversations is that we're having the nuance of it. Because I think so much is in the headline and is in the stat that is scary, but then the follow-on isn't done to say, so how do we help you be part of changing that stat? Not run away, this is a completely insurmountable problem.
For sure. And for the female founders who are listening who still want to do it, I had a really interesting conversation with one of the guests in the last season, and she was talking about the funding gap as well. And she was saying, because she did her master's thesis on this, and she said that according to the research, men are more likely to get asked about risk and women are the other way around. Women are more likely to get asked about risk on their pitch decks and men are more likely to get asked about opportunities.
Yeah.
So,
and by the way, including by female investors, which is interesting.
Yeah. And she also said that if you have a mixed founder team, if there's a female founder on the co-founding team, it reduces the chance of getting investment by 85%, which is crazy. But to the point around risk and opportunity, how can we talk about ourselves as undeniably valuable with so much to offer, so that to ourselves as well, because I think the confidence issue starts within as well, because we internalize all these messages that are given to us about being a female founder and being a woman in the workplace and how can you manage all of this, and then how do we share that with others?
You know what, I don't know if it's that I'm seeing women aren't pitching as confidently. I think sometimes that plays a part, but I actually think no, that's not true. I do think women undersell themselves, particularly around the team. So when they're on the team, they don't always rave about themselves in the same way. So there is a bit of a gap there. But I think we need to be really real that if that's what you're going to face, you probably have to do two things in that conversation. One is answer a question. Really frustrating. You don't want to be seen to be sidestepping. But then I think there's a question of how are you making sure that on top of doing that, you are shining a light on the opportunity. So you're not just answering the question, but you're also finding ways to put in the scale of the opportunity, how big it could grow. And so it might be worth playing with, is there an authentic way to answer some of the risk questions that are coming up? So after each investor call anyway for any founder, I'd go and write down the questions and then do a bit of an audit, not immediately go for a walk in between, but do a bit of an audit of, are any of these things that should actually be already answered in the deck? And if so, do we believe they just didn't hear it? Like, should we make an adaptation? And or are they things we're really happy to be asked in the Q&A, but we just need to prepare a better answer or whatever it is? So I would be looking at, for instance, if they're digging into your financials, how can you talk to that and really not sidestep, because that's a bad look. But how can you answer the question and then talk about, actually, you're right, we've modeled this, we've looked at this, this is the answer. And actually why we got so excited when we did this is because we realized da-da-da. And can you start to prepare some of those? And I think the key is it can't feel like it's a sidestep of the question or an evasion, because that's a red flag for investors. But you do need to be aware that they're not going to do that for you. And I think the other important thing is don't internalize just because that's all they're asking you, that that's all there is. So don't walk away with the message that, you're more risky than the equivalent male-founded startup.
That's really valuable advice. Thank you. And we discussed how it's not just on the female founders. What can, if there's any guys listening, regardless of whether they're co-founding males or they're customers or they're investors or they're just like friends and family of female founders, or they know someone, what can they do to make a change in the conversation around female founders and investment and inequality? How can they be supportive and be part of the solution?
So I think the easiest one to start with is if you're an investor, don't just ask about risk, right? Look at the questions you're asking, audit your own questions, like write down after each meeting, if you spoke to a female or spoke to a male founder, what did you ask? And like start to see, there's a pattern. And don't do that through the lens of, if there's a pattern, I'm just sexist and it's awful because I think that's going to put you off it. It's like, hey, we've all got these internalized potential biases, or no, we all do have internalized biases, and where they sit is different. So I would look at auditing your own questions. When you have a female founder you meet that you think is exciting, lead with how exciting you think the opportunity is to your network. That warm intro, that male speaking to the opportunity does play a huge part. So how active can you be in your allyship there? And also you're sharing an opportunity with amazing people. By the way, this is something I wish founders would reframe a little bit. Often you feel like you're going with a begging bowl. You're taking an opportunity that is hopefully going to deliver them an amazing return on investment and be part of a really fun journey. Remember that. So yeah, I would, investors, obviously audit yourselves, look at what you're asking, track where you're investing, and then champion to the wider ecosystem. And customers, buy from female founded brands.
Buy women built.
Yeah. But also, give great feedback. Like when you've had a product that you've loved, please write a review. Please tell your friends. People who are outside of startups, I think, forget how important this is. If you're a friend, buy your friend's product. Like, don't just ask for freebies. Can you actually buy it, write a review, share it with everyone you know, share their stories? All of those things make a huge difference. Have I missed any category?
Male co-founders?
Oh, male co-founders. Yeah. Depending on who you're in the room with and how appropriate it is, call out the patterns that you're seeing. So a really common one is male co-founders saying something their female co-founder just said because the question doesn't seem like it's resolved, and then being told, great point, Tim, my co-founder. And in that case, Tim would go, Hattie actually just made that point. And, not super loaded, not super accusation, but just pointing out, Hattie just made that point. And I think having men start to help interrupt these patterns in a really constructive way and spot them is really important. And also check in with your female founders, how are they feeling with their own confidence levels if you've just had a meeting where they've been asked all the risk-based questions, or there's still so many ones I hear about only the male co-founder being addressed in the post-investment meeting email, even though the female led the pitch, all sorts of that. So again, can you help to interrupt those things? But be careful, because obviously you are both playing a game at the same time and you don't want to lose your opportunity for funding. So fair enough, play the game. But yeah, look out in those small ways.
Thank you for sharing that. I'm super, super grateful for your time and for your insight. Sure. I always like to end the podcast on the theme of gratitude. So can you please share with us what you're grateful for today?
Oh my gosh, so many things. That's hard. I love gratitude meditations, but I'm so bad at picking three
You can give us a little list if you want.
My list, okay. I'm super grateful for the people in my life who like pick me up when I'm feeling low, or like cheerlead me. Amazing boyfriend who, I was having a stressful call this morning. He made me a calm cup of tea because he could see the call was stressful. And it's just fab. Friends who hear my founder rants when they have no idea what I'm talking about, but also will distract me when I need distracting. Family for the same reason, and just so much support, even though they still don't really understand what I'm doing. Mostly it's the people in my life. My co-founder, for making it really fun, and for being the best challenger of when I'm being overly hard on myself. And actually, like, maybe a nice tiny story to end on, like when I did have to step out of the business for a month to support a wonderful friend who was going through something really awful, but it wasn't anything I would have got compassion leave for in a company, right? I really couldn't have in any way justified being where I was, doing the level of work I wasn't doing. And I said to my co-founder Tim at the time, am I taking the mick? Like, please tell me if I'm being too cheeky, because I'm really aware that I just wouldn't get compassion leave for this. And he turned around and said, this is the reason we do what we do, so that we can be there for these life moments that matter to us to be there for. And this is a life moment that matters to you to be there for. So you go be there. And I promise I will take it on myself that if I feel like it's taking the mick, I will tell you. And actually, that's a really nice thing I think you can do for your founder friends, is like take some of the emotional load off them. Tell them you'll tell them if you feel like they're letting you down or they're dropping the ball. And then do tell them so that they, can help, but take some of that pressure off them.
Yeah.
Yeah.
That's beautiful. Thank you so, so much. You truly are an incredible and empowering woman.
No, thank you. Likewise, right back at you.